Good afternoon, everyone. Good to see you again. We are waiting for Himanshu. He will join us soon, but still, till then we'll start the conversation. So, quickly, the idea of Encashing Fintechs collaboration and partnership behind crafting this session is very simple. The Fintechs initially started as a competitor to the banks. They initially claimed that they will overtake banks, but gradually then they realized that, perhaps they cannot move the elephant, but they can work and walk with the elephant. And that's where the partnerships and collaboration models are happening very aggressively. In fact, each and every bank will have more than at least 5 to 10 partnerships with the fintech companies, and same is with the insurance companies as well. They are partnering aggressively with tech companies for the better collaboration, engineering, and all these aspects. Good to see you, Himanshu. Thank you. So that's what we'll try to learn. The important aspect here is whether these partnerships are successful in adding a business value. So I will ask my all panelists to share their opening remarks, perspective in terms of how are they encashing the whole collaboration and the partnership model for their companies, and how actually the fintech, insurtech collaboration is making sense. So this is my first common question to all the panelists, and then I will get into specifics. I will also try my best to take maybe a 1 or 2 questions from all of you if you get a time. But let me begin, and I would like Goutam to start with.
Hey, thanks. Thanks for having me here. Now that I represent insurance, there is a smaller category of these partners. Normally we call them insurtech. Most of us know the biggest insurtech, which are doing great business in India. There is one more point that I wanted to put up, beside only talking about insurtech. The regulator also now taking a shape of insurtech. The recent few initiative that they have started driving, if you look into, is actually creating untouched market, unique market for the insurers as well as for the customers. So that's one very unique thing started happening. Now coming back to your question, because we are regulated business, there are lots of areas where our capabilities are a little limited, and we need to partner with team which can think little differently. For sure on the lead generation and all of that is an age-old process where insurtech and fintech had been. But looking into how to make the whole insurance selling process and servicing process seamless, frictionless, is where I am seeing tremendous amount of a number of smart Indian insurtech doing good job. And that's a sector which would grow. To my mind, last year it was around 1.8 billion. It might actually come up to 14 odd billion by 2025. That's how it would grow. I am 100% sure they are not taking over the industry. They are growing with the industry and helping the industry to grow. So that's the take that I have. 2 points. One is the regulator taking shape, and the ecosystem of insurtech is very solidly there.
Sure. Thanks, Goutam, for adding that. So when we're having a quick pre-panel discussion, the consensus were this, that let Sandeep speak for 45 minutes alone, because he's representing the largest bank of the country. So not for 45 minutes for sure, Sandeep, but you will have lots of insights to share. And one anecdote here, I was talking to someone very senior at SBI long back when the partnerships were happening. And I asked him, how does these partnerships are working? He says, I asked the fintechs how many people you can serve. And he tells me that, okay, he can serve maybe 1,000 people in single day. And I ask him to serve 1 lakh people in a single day. And then he doesn't have an answer. So how is your experience in terms of collaboration, Sandeep, in terms of, because you are heading one of the largest banks, and I'm sure you will have partnerships with hundreds of fintechs.
Yeah, thank you, Amol. First of all, thanks for having me here. As our friend from insurance sector has pointed out, has set the context. The demands on bank, as on it, the views expressed are purely personal, so please take it that way. The demands on bank and big banks like State Bank of India and Bank of Baroda, ICICI, HDFC, are tremendous nowadays. Till 7 or 8 years back, we were expected to do a conventional banking, stay within the parameters drafted by the regulator. But nowadays, so many new things are coming in, and in last 5 years, if you look at the way technologies are changing, it becomes very difficult for a big bank to have in-house all this expertise, particularly innovation. And then being a very tightly regulated entity, the speed with which I am able to move, or the elbow room that I am having, is very little. And I need to be very careful because I am holding customer data and I am holding also money of the people. So I cannot experiment with the technologies the way perhaps some other entity will do. So now how to bridge this gap? Demands on one side, whether they are regulatory demands or market demands, and on the other side, the customers growing expectations from you. So that is where this lightweight, fast-moving, very agile, innovative entities like fintechs fit in, which perhaps the big tech companies may not have to that extent. So the partnership is shaping well, but let me admit, it's only in its very nascent early stage. That comfort to have fintechs as an ongoing partner, that thing still has to come in. It is still waiting to come in. There are several things because of which this deficit is there, which I will come to when the individual questions are asked. So these are my opening remarks. Thank you.
Sure, Sandeep. I think a valid point that fintechs are far more flexible even compared to big techs. Very interesting points. Sandeep, Bala, let me come to you and take a perspective on the tech side in terms of how the collaborations and partnerships are shaping up.
Yeah, so I think, first of all, thanks for having me here. I think there are 4 areas in which we see this collaboration between fintechs and FSI institutions, right? So it's not restricted only to banks. It has insurance institutions. It even has, capital markets in some sense. So the first is co-creation of products. As Sandeep sir said, right? On the innovation front, if you want to move faster, you have a fintech which is able to address a particular need of a society or a consumer. So they get into this co-creation faster, and then the larger bank is able to, have that wonderful partnership which helps them get to better products and reaching segments of society which they would not have probably reached earlier. I think the second one, very importantly, is about managing operational efficiency. Now, if you have a AI, ML, and NLP software provider, which can look into the PDF of your annual reports, which can look into the documents which are submitted as part of your usual submission, at the end of every year, and just extract data from there. And that data can be used for a lot of purposes. It can be used for lending scores, it can be used for understanding the regulatory overhang, it can be used for understanding the health of the business. And we have, ISVs and fintechs. And so I would categorize fintechs not only who are lending or who are in the actual financial space, emphasize on the tech part of it. The third piece is around the monetization. How are you able to monetize using, APIs? APIs have always been there, but that was a lot to do with management. Now, how do you monetize that and grow your base and ensure that the incremental revenue comes with less sweat and more automation, right? And the fourth one is creation of new markets. Now, coming from Google, GPay is the best example of creating an absolutely new market, especially with respect to this huge opening up of, the merchant side of things, right? And so I would probably categorize this as 4, and then we can, delve on it in detail.
Sure, I think valid points, Bala. Surely when we speak about data, Google knows more of us than our family members these days, for sure. So, Jithesh, let me come to you and learn from you.
Yeah, thank you, Amol. Thank you for hosting me and all the fellow panelists and all the people here. Good afternoon. To answer the question, see, as far as Federal Bank is concerned, we are seeing a lot of traction in the fintech space. We are seeing a good amount of enthusiasm among fintechs to partner with the banks, not only Federal Bank, but all the banks probably will be getting a lot of requests for partnerships. We are seeing tremendous success in terms of whatever partnership we have been doing in the past. So primarily what we have done is I will take fintechs into two categories of fintechs. One who helps us servicing customers, or one who helps us co-create products with us, and one who build platforms for us. So these are two types of fintechs working with us. So primarily when we discuss about fintech, there is some amount of confusion regarding who is doing what. So here let me first talk about fintechs who are partnering with us for customer acquisition. So all our fintech partnerships are basically aligned to our business strategy. That is something which is very important for any organization. They partner with fintechs, because if it is not aligning with the business strategy, this is always going to be a challenge, because who is going to take care of this particular partnership? So the current partnerships are aligned to our business strategy for the next 3 years. And we have actually partnered in 3-4 areas mainly. One is financial inclusion, where in Gujarat we are doing with one of the partners called DGV, who helps us in automating payments for Amol farmers. And in the liability space, we have Phi and Jupiter, who are working with us for acquisition of customers, especially Gen Z or the salaried millennials who otherwise were not banking with us. So predominantly we were having a set of customers, so NRIs and other set of customers, but millennials were not banking with us. But with the help of Phi and Jupiter, we were able to ensure that this type of, we also getting these customers. And then we have OneCard as one of the credit card partners. And we were not having a credit card at that point of time when we started the OneCard partnership. And this helped us to get NTB customers. So credit card was one of the strategies of the bank at that point of time. And it was a perfect partnership. And then in the financial inclusion space, we have New Street Technologies, who are actually doing JLG lending, which is again one of the priorities in the private sector lending. They are helping us to reach out to customers. We launched 1-minute Kisan credit card loans in Tamil Nadu, which is fully digital process. So that's again with the help of the fintech only we have launched the product. We have doorstep gold loan product with Rupik. Today I think ETBFSI, this particular BFSI is actually presenting an award for the partnership for the bank. So what I was saying is that, okay, see, because we are aligned, our partnerships are aligned with our business objectives, I think we are seeing a lot of traction, a lot of take inside from the in-house also, we are seeing a lot of traction. And we are also working with more than 30-35 fintechs on the IT space, where today if you look at my website, my chatbot is delivered by a Google partner who is a fintech, who is just a startup, who is a fintech, who is delivering the entire AI experience for the bank. And similarly, there are so many fintechs, our entire HR, basically HR recruitment is paperless, as Amol was saying when he met our MD, he is saying that my office is paperless. So our HR recruitment is fully paperless. We don't take any paper from a candidate. And this is delivered through a partnership with another fintech who delivers an AI-based experience. So similarly, with my IT, with my risk, with my compliance, with my analytics team, there are so many fintechs working on delivering certain capabilities, as our SBI, Mr. Sandeep Ubale was saying, that to enhance the capabilities, probably new technologies like blockchain and other AI, etc., we don't have expertise within the organization. So how are we going to get it? So fintechs always help us in getting that expertise, because they are just out of IITs and NITs, and they create this type of innovative products for the banks and others to consume. So that is my initial take. Thanks, Amol.
Sure, noted your points, Jithesh. I think most of the banks, like Jithesh mentioned, are hiring people virtually through robots. God knows, perhaps banks will start hiring robots itself, and robots will recruit robots, perhaps going ahead.
So Amol, their chatbot actually earns money for them through remittances.
That's quite interesting.
And that's the partner they were referring to, right? So it just tells you, oh, today's this exchange is so much. If you give me so much money, then I will give you a better exchange rate. And that's all done by the chatbot.
Sure, thanks for adding that, Bala. So, Abhijit, we have seen a great rally specifically on the NBFC side, because most of the fintechs are partnering very, very aggressively for the digital lending part, right? Maybe not on the housing part, but personal loans and BNPL and all these products. But a lot of housing finance companies are also trying to reduce the burden by collaborating. So I'm sure your perspective will be different. So please go ahead and share your opening remarks, Abhijit.
So I think for us, home is a very difficult product, unlike many other banking products, which is completely online, delivery can be online, cash delivery can be straight away to the bank account. But there are a lot of challenges within home. For example, title of the property. Are there any legal cases against the property? So there is a whole dimension of property which comes in, which one has to take care. So we are actually, I kind of, always think that fintech is like the charger to your iPhone. Your iPhone won't work if the charger is not there. Yeah. So somewhere the relationship has now become very symbiotic, where there are a number of external entities through whom you are collaborating, but it's very difficult for an organization to keep creating those interfaces. So, if there's a common standard by which they are actually integrating with, let's say, a KYC or whatever, it's much easier for us to plug and play and move on. So there is, as I always say, there's an innovation within the company, which is, for us, how can our credit processes, how can our onboarding processes, how can our informing the customer across the journey be far more digital, paperless. And there is some innovation which is outside that, how can, let's say, an account aggregator, for example, you've tied up with an account aggregator. We didn't even publicize it on the website. This is when CUG were just trying to see what's the experience. And there are enough individuals who have found where it is and started using it. And, there's so much innovation that can come in by somebody who is an account aggregator, who creates a credit proposal, gives it to us, saves us time, we get it in the format we need. So there's a lot of consumption of innovation outside that the fintechs, etc., bring to us.
Valid points, Abhijit. Himanshu, your perspective in terms of collaboration partnerships, I'm sure your perspective will be a little different because you're partnering with them like Bala, right? So please go ahead and share your thoughts.
Yeah, thank you. So most of the brands are very well known here. So I just want to speak a couple of minutes about Technopoint first. So we work with 15 different brands in BFSI space, helping them to accelerate their outcomes using technology. And we mainly work on the Adobe stack. So as far as this collaboration is concerned, one of the important things that Goutam sir just mentioned, that the regulator himself is becoming InsurTech, right? A very interesting thing, which is kind of allowing the custodians of insurance as a product, the custodians of banking services as a product, overall, right, have more agility and more freedom to ensure that there's lesser dependency on the fintechs of the world because of the trust issue that Mr. Sandeep from SBI just mentioned. So having a technology layer which is backed by a brand like Adobe and then empowering them to give out innovative products from the parent brand itself is where our focus is, and we try to ensure that more and more innovation can come out from the companies, to meet the customers.
Sure, noted your points. Sandeep, let me come back to you now, and I have some specific questions. So how do you scale up these partnerships at SBI? Because everything you need at a larger level, not only you, but also other banks and insurance companies. And how do you ensure the seamless and frictionless delivery from the fintech side?
Yeah, thanks, Amol. See, scaling up for banks like State Bank of India, since we are a very traditional and conventional way of working, scaling up is never a big bang kind of a thing. It's always gradual. Each step is taken in a very cautious manner. Because of this account aggregator thing coming in and many other products that we are offering on this government portal of called Jan Samarth, the integration with the fintech or taking fintechs for some services has become inevitable. We can't do without them. Let us first acknowledge that. Now what happens is that if you look at the fintech and if you look at a legacy bank, first of all, the organization structure, there will be a variance. The way fintechs are organized, they are very lightweight, very fast, very agile, quick decisions, innovative technologies, run by people who are very young, and therefore the mindset is also different. And when they try to give some service to a legacy bank, any bank for that matter, why to quote only SBI, even if you talk about Federal Bank or Saraswat Bank also for that matter, then there will be always some difference in the way the things are being thought about. And there are 4 areas where we find there is always some difference. Number 1 is the compliance and security discipline. the kind of compliance and security discipline banks are following, being a very regulated entity, the fintechs perhaps are not that sensitive about it. I'm not saying that they are not following security practices, but they might not be following it the way we follow them. Because my regulations, the conditions in which I am supposed to work are totally different. My environment is completely different. I have to confine to that. They perhaps are not functioning in the same environment. So that difference is bound to be there. So we have to pull them from there to here, bhaiya aisa karna hai. Our young friend will agree with that. So the demands are there on the fintechs that you comply with all these points, then come back, they complain, sir, kyun chahiye itna sab? It's an investment for me. I can't invest so much. I'm a small company. Second thing is integration. I am having all legacy system. He comes with something which is very state of the art, new, and he wants to integrate with my legacy system. It becomes a technological challenge. Then either he will tell me to upgrade my systems to match theirs, or I will tell him to bring something, a middle between your system and my system, so that it works like a kind of a golden gate kind of a thing. So it becomes a very tricky and funny situation at times. And the third thing is, of course, revenue sharing. Since most of the fintechs, they are growing and they should grow, the aspirations are there, ambitions are there. So the expectations of getting revenue from a bank, which of course is at a very different level of earnings or the cash flows, so that expectations are there that I need to get some pie out of it, some share out of it, which perhaps may not happen. The kind of expectations are there, there is a mismatch in the expectations. And the fourth and the most important thing is IPR. When they come up with some kind of a source code, the banks will say, I will own this source code now. Once I have onboarded you, you are there with me for 2 years or 3 years. Now this source code you have to give to me, and this IPR becomes a major challenge. They don't want to leave it, and we want to take it. So these are the things, as I said in my opening remarks, that it's still taking shape, and it will take some time first. But the first thing is that you need to acknowledge that fintechs are there, they will remain there, and banks will be depending on them. Because the kind of innovation that fintechs are bringing in, whether it is in digital lending, whether it is in insurance, and we are there in all sectors, as you know. Yes. We are doing insurance, we are doing general insurance, we do life insurance, we do cards, we do mutual funds, we do cap securities, we do capital market, everything. So in all these areas, and the banking area, particularly trade finance and other corporate banking and all other things, the dependency on having a partner which will help me in go-to market in a faster manner, their role becomes very important. Sure. But then, of course, so what we are trying to do, if time permit, you can give me 2 more minutes. Yeah. So now what banks are trying to do, I would say, rather than SBI, that we are looking at fintechs as service. I did not bring them completely on board. So we are trying to work out a solution now. That will create a panel, like I'm having a panel of engineers, doctors, and many other service providers. Why not have a panel of fintechs? And I take their services on need to know, or kind of, if I need some service, I will go and tell them for this many days, give your this service. And then I use that, I pay him for that, and then I'm done with it. So we are experimenting that model also.
Sure, quite meaningful, Sandeep, and very realistic. Thanks for highlighting that. So taking cues from Sandeep, Jithesh, I have a very, very important question now, and I'm sure perhaps fintechs will be happy if I ask you this question and if you answer that. So generally, ऐसा देखा जाता है कि when you meet a girl, it takes at least after 10-15 dates you get to marry a girl, right? You get that chance. But fintechs complain that even after meeting 50 times to a banker, still the collaboration doesn't happen. So what goes wrong? What are the parameters to choose the fintechs? Why the integration takes so long? If you could highlight these parts, I think it would be a value to the conversation.
Yeah, that is a very valid point. So we meet a lot of fintechs who wants to launch a lot of products with us. So see, as Sri Sandeep was mentioning, I borrow most of the points which we have already mentioned, that gives answers, but still, see, primarily, one is the business alignment, as I told you, the business objective of the entity should match with that of the bank, number one. Number two, they should be able to provide, they should be able to meet the regulatory guidelines, and they should invest a lot in this particular business. So, if somebody is, because this is a cost game, because the moment they start to come and start to partner with the bank, they need to invest in a chief CISO, they have to have risk team members, they have to have separate verticals managing security, cyber security, and all the regulatory compliance, they should be falling in line. Plus, they should have a cloud infrastructure which is as per the regulatory guidelines. Plus, the partnership should make revenue. See, basically, it is a very cost-intensive proposition, partnering with a bank or launching a banking product. Of course, there is a cost involved. They have a high CAC. And how will we make revenue? So there are a lot of parameters which primarily the fintech should meet the expectation of the bank. There are certain parameters bank has set, and only if they tick all these boxes, we will be able to partner with them, number one. Then the long-term interest of the fintech in the game, because I cannot launch a product and tomorrow I cannot just say that, okay, the partnership is broken, we are stopping the product. That cannot happen. So the fintech should have long-term goals, and which should be visible to us. Plus, they should meet our certain scorecards, etc. And plus, they should be able to invest. We should know that they should have either Series A, Series B, or C funding. Or maybe like the way I was selling up the Google Cloud example, the partner who are doing our chatbot, probably there the investment is low, but we are purely depending on the technology, then the bank should be supporting them. So such cases, we look at the pure technology capabilities of organization. So this is a 6 to 9 months game actually to vet a bank, and if minimum 6 to 9 months will be taken because they go through a lot of audits. There's a due diligence, third-party due diligence is being done on the entity, what is their HR policy, whether it is documented, whether the data segregation, how is the data segregation happening, are they using corporate mails. So there are a lot of parameters which, whatever security compliance are applicable for a bank, that's applicable for a fintech. So there is no compromise on that, and only if they tick that box, we will be able to actually partner with the fintech. Plus, there's a commitment to the customer, external world, so that should also complete. All of a sudden, the fintech should not shut down and say, okay, now I'm going into a new vertical, new business. That shouldn't happen.
Oh, sure, thanks. Thanks for adding that, Jithesh. And regulators is also becoming very active and asking regulatory entities to kind of regulate. Sure.
From what Jithesh said, I was heading one working group for RBI Innovation Hub. So we worked for 3 months, and then we have given our suggestions to them. So one of the suggestion is that the sustainability of the fintech to keep delivering over a period of 3 years or 4 years, that needs to be screened before onboarding them. So because it becomes very important, because the board members they keep changing. The resource which was available till 6 months suddenly disappears. So all these things they can run can be a risk for the bank.
Yes.
Because I cannot afford to take that risk. I am answerable to my customers. I am answerable to regulator, not the partner who is helping me. So we have given a lot of suggestions. So definitely it will help in fostering the relationship, or it will take it to the next level, definitely.
Absolutely, very, very valid point, Sandeep. I think the people standing there at the gate can sit here. I mean, there are a couple of seats available in the second and third row. So let me move ahead and bring Bala back to the conversation. So Bala, you are dealing with a lot of BFSI companies, and I would like you to, tell me that what kinds of difference the partnership model have brought specifically when they're collaborating with tech companies or fintech companies. How does it different, and how the different models have emerged out of these partnerships?
So let me give you probably some statistics, right? So first of all, if you look at the financial inclusion index, right through the pandemic, it increased from, I think, 53.9 to about 56.4, and that increased during the pandemic. If you take the number of digital transactions which happened, that also, I think in the last couple of years, trebled. Now, the number of digital transactions expected by FY26 is somewhere between 150 billion to 170 billion. If you take assets under management, right, for mutual fund organizations, that's supposed to get to 1.1 trillion. And that's again supposed to be triple. So when you take a look at some of these statistics, and also take a look at the fact that we have about 600 million population, which is underbanked or unbanked. So that's the other end of the statistic. You also have 1.2 billion smartphones in the country. and you have a little bit more than that population. Now, how do you bridge this entire gap of what you have and what people do not have? Now, let me take an example of an institution called iServeU. What iServeU does is it provides financial inclusion as a service. So it does all of what your business correspondence needs to do, till that last mile where a farmer can probably today, because he doesn't have a digital footprint, because there is no idea of his spending habits, they have no insurance, they have nothing to call for except remittances from probably their son who's educated and working somewhere, right? Now, if as a farmer he comes into the banking system, iServeU, beyond getting this FI piece, they also provide a core banking stack. They also provide a middleware. They provide a switching engine. They provide a recon engine. And so they provide the entire stack. Now what this does is you're able to provide neo-banking, you're able to provide FI as a service, you're able to provide CRM as a service. So, you have one institution which has the entire stack, which can then help the bank reduce its cost of acquisition of such customers. And then it becomes easier because you have 1.2 Jan-Dhan accounts as well, right? So I'm just taking an example of how iServeU has helped. There's one more example, right? If you take Open Bank, now Open as a company, right? Open has built a business banking system, 2.5 million SMEs on that platform. Now, it would have been very difficult for a bank to get to that scale so fast. But because they have a simple, business journeys which are personalized for that particular SME, it becomes easier and faster to onboard and then get them onto the overall platform. The third piece is, if you take Google Pay itself, Google Pay, I think in 2021 itself had more than 12+ million merchants. Now, if you're taking a look at merchant financing as a new avenue for the bank, if you're taking a look at digitization of merchants as an opportunity to integrate with them, if you're building absolutely new mobile applications which can be delivered on the fly within a week or whatever it is, if you're easing out consumer payments already as you're doing, then you have a platform like Google Pay which now is going to get into P2M and get into credit and opens out a whole new vista. So these are some of the real differences which we can see in the last 4 or 5 years. Obviously, riding on the back of what we call as bank independent infrastructure, which is BII, and we are ensuring that the payments go through in a manner which keeps the customer satisfied. Because the last thing a customer wants is their payment not go through, and all of us, when we use some of these payment applications, sometimes it does not go through and we feel frustrated. And we do not know. And you might say that GPay kaam nahi kar raha hai. But when we work together with the bank and with the entire set of institutions, with the APIs and all, the entire ecosystem has to work. That's the difference probably we have worked on.
Sure. Quite delightful, Bala. Thanks for adding. Even most of the fintechs are thinking about merchant financing very aggressively. So thanks for adding that. So Goutam, let me come to you, and you specifically mentioned about the InsurTech and the regulator is the greatest innovator now. Obviously, the InsurTech have made a big difference, right? The two new insurance companies, specifically InsurTech companies, which came into the market, have large market share, specifically number of policy holders, or even the distribution chain is very strong. On the other front, traditional players like you are also innovating and trying to become as smart as the InsurTech companies, and you have an online solution as well. My question to you is, how is this competition actually taking forward to the insurance segment at all levels? Because the collaboration is happening on all fronts.
So let me put up a couple of points there. One, as in my last point, I talked about regulator coming up with lots of new ideas. If you see in a different perspective, regulators are setting the whole playing board with lots of public tech, which kind of enables thousands of us to create a business model out of it. Till now, I don't see too many InsurTech coming up as a life insurer though. However, I have seen, or we all have seen, there are multiple numbers of players coming on the general side of it, health side of it. To my mind, with the help of InsurTech, a monoline business would take a huge spark, primarily because the penetration on insurance on any line per se is still at a very nascent stage in our country. So there is market. Now coming back to your specific point is a digitally savvy insurtech, how the competition they are building up. Now if you are building up a digital insurance company, the first thing that will hit you is which segment that you are talking about, right? Because in India, in our kind of a country, not everybody is equally digital savvy or probably consume the same stuff in digital way. Like when you bought your diamond ring, you have not bought it through a digital advertisement or through a digital method. Like that. So your customer segment or target segment would be different. The moment your target segment is different, your business model would be way different. When that happens, your organization structure goes way different. I give you an example. If you look into ECO, their underwriting structure versus any other general insurance motor business groups underwriting structure, there's a striking difference. Others may have 100, this guy may have only 2 or 3 or 4. Now that calls for tremendous challenges, tremendous possibilities, right? The third point that I talk about is, your investment method would also be different, varying to technology. In India, at least till now, pure digital, insurance sell is still sub 10, right? Assisted insurance sell maybe a couple of times of that number, because that is assisted. Which means if you are focusing on only digitally selling insurance, you are actually catering to a very small number, right? Hence, your ability to put money onto it, invest onto it, is structured that way, because there has to be a financial equation out of it. That is another area where I see a digital insurance company or digital insurtech would find a little different than a legacy business. Having all of these 4 points said, I think the one thing that none of us can stop is efficiency. Most of the insurtech comes with a tagline of efficiency at certain level, whether it's a frictionless, whether it's scaling up, whether it's do it in 2 clicks, 3 seconds, whatever it is. Hence, there is tremendous market for it within that. Hence, it is going to be a win-win for both sides, existing legacy player as well as the upcoming new players.
Sure, I think the efficiency point, Goutam, is very, very important. So, Abhijit, let me learn from you in terms of how the collaborations are actually strengthening you in terms of delivery of product, recollection or the collection or the recovery of the loans or specifically in the smaller towns, and how the partnership model has helped you there.
Yeah, I think for us, we don't use the word collection. For us, we use customer relationship management, even for, customers who have become delinquent. The philosophy of the company is very simple, that, we did all sorts of credit analysis, etc. As a customer, we asked you for all your data. And by chance, went through a bad time in life, all of a sudden, we don't put all the machinery to, catch you by the neck and take the money. That's not the way we work. We try and actually work with you through that period of stress in your life and make sure that there is a solution which helps you as well as helps the organization, and work with you empathetically during that time, because you're also a customer, no matter you went through a bad time during that phase. Yeah. And that's why generations of customers have actually been coming to us for home loans. So we don't use that word at all in the company. And all the collections or, whatever this part is actually all handled by employees, and very empathetically we deal with them. However, having said that, typically what we work with fintechs is, or, the smaller companies or the newer companies, what are they bringing to the table is something which is We look at with a very simple lens of digital. So what's digital doing actually is basically making everything faster, or it is making something better, or it is making something cheaper. So if it is falling in that particular lens, if it passes that test, whatever we call it, there are various ways in which we partner with the company. We can invest in the company, if we think it is small and, there's a committee, we look at it, 3-4 people, who've been used to investing in startups, and we look at it, maybe it's small today, but it may be big tomorrow. And, there's the same thing which I did in a previous company, and in this company also I'm investing in that particular organization. So startups need some kind of a support to scale up, and that, companies like us owe it, to the ecosystem to make sure that we help them. The second piece is, that how can we improve their, let's say, in some cases it happens that, it's most startups when they start is one computer shared by 2 people, and slowly it moves on. What is the kind of technology support or process support, or, how can we actually help them scale up as we move forward? Yeah. Are there other places? So we don't get into, that I want your IP. That's clearly, you are killing that company. So we actually say, okay, what is the fair price that I need to pay to you at this point, which is fair to you and fair to me? Because, at this early stage, if I've come and worked with you, there is a fair price that I should get versus a different price you might charge others. So how do I help you during this life cycle to grow? So it's a very nurturing kind of an approach that we are trying to take. Few startups we've worked really well, and, they've grown and scaled up. They get onto the covers of the magazine. People like us don't get onto the covers of the magazine, but that's, the role we have been assigned in this whole game. But that's how we look at it, and it's working really well. And, in some cases, they bring a lot of innovative things to us. There is almost every second Saturday we've launched a Finnovation kind of a project where we actually work with people. We have given our problems out. They come and present to some 15-20 people. We look at it at a very wide lens that, is this solving my problem? And then we move forward. So it's a very, very different kind of an Indianness in it, to take these people forward, not looking at just ROI, ROE, because over the course of time, it will happen.
Sure, Abhijit, quite interesting points. So it's a different level of customer experience, and let me drag this conversation ahead with Himanshu and add more on to, you heard, Abhijit talking about how they are redefining the whole customer relation, which is not a recovery and delinquency anymore for them. So what are your thoughts in terms of the customer experience which has changed from the BFSI companies, and how the partners, are actually adding value to it, adding value to the BFSI companies to offer a greater customer experience?
Yeah. So to give you a few examples, right, when demonetization happened, moratorium was declared, right? So Tata Capital is one of our customers, and everyone, the moratorium word itself was a new, new thing for all of us who had loans and stuff like that. And everyone was interested to know, what it means for me and what is going to happen and how much do I owe and stuff like that. So we quickly gathered together, and with the help of Tata Capital team, we came up with a moratorium calculator, and it was live within like 24 hours of it being announced, right? So partners like us bring that agility and the platform on which we work, right? For example, in case of fintech and banks partnership, who owns the customer, right? That fundamental governance of, what can be done with the customer, is there, you acquired a customer through one particular fintech, can you use it further to do something else with it? Technology plays a huge role in answering these questions. We have a customer data platform, a real-time customer data platform, which allows, which meets all the compliances rules and allows customers, to be treated the way they expect to be treated, that their privacy is respected, and, all the marketing agencies or anyone else who is touching the customer profile can only do what they are allowed to do. Right, so we take responsibility of doing the technology part, right from personalization at scale to the governance that is required to ensure to do it with responsibility. So that's where partners like us come up and play a role to do that part.
Sure, Himanshu. So again, friends, I have a couple of questions, but I would like you to ask some questions if you have any. So anyone has any question, please go ahead and raise your hand. I will come back to you. Anyone else apart from the gentleman in the first row? Okay, please go ahead. The mic is there.
Thank you. Thanks again to the panelists for a very informative session. And my question is actually building on the point which Abhijit mentioned about investing in the startups or the fintechs. So even the heading of the session is that encashing the fintech collaboration partnership, it mostly remains service provider versus service receiving and more transactional. And having worked in JP Morgan, I have seen those journeys. In 2021, there were 33 acquisitions done by the company, and last year also it was more than 30 acquisitions. So how the banks like State Bank of India and the other banks, they see the value in these new age startups coming and being part of the equity over there and trying to garner the value and supporting these startups rather than simply being a transactional relationship?
Sandeep, you can.
Yeah, thank you for the question. Yeah, as Abhijit mentioned, all banks are in favor of investing in the fintechs. There is no second thought on that. Because that is one of our basic duty. If any startup is there or fintech is there, and if they are able to pass the tests which are required for the investment, we definitely go ahead and invest. SBI is also doing it. That is one thing. What I think the discussion was more about was whether I can onboard them for my mission critical or less critical things. So that is where actually the relationship really becomes more closer or more thicker. So whatever issues that we were talking about, it's not about favoring or not favoring startups or fintechs. As far as investment is concerned, we go ahead, we do it. But when it comes to hand over some project to them, at that time we need to do our own due diligence and put some conditions and things like that. So it's a kind of a balancing act. Investment is one thing, taking services becomes another thing. So we are doing both things, and all banks are trying to see that the fintechs and the startups, they really grow and they get their rightful due, and they get proper work, and they get the recognition.
Sure, noted your point, Sandeep. We can take one more quick question if we have. Anybody has any one quick question? Yes, please go ahead.
Hi, good afternoon, everyone.
Yeah.
This is Ajay Kapoor from HDFC Bank.
Sure.
One challenge that we face is this integrating with fintechs. It's not a complete solution. So they bring a part of it. And then we do a lot of integration and a lot of work. And at times it happens that we make these fintechs to do something beyond their domain, or may not be beyond their capability, because in technology, nodes and software development can be done. And then they accept it most of the time, because you are HDFC Bank, what you are asking, I'll do it. But then it goes into little difficult situation. So have you come across this kind of situations, and how do you have managed that? Thank you.
Yeah, it happens almost with all fintechs. So what you are saying is true, and that is how it happens. So as an elder brother, it is my duty to know what he can deliver, and I give only that work to him. If you try to, just because it's a smaller company and will try to deliver whatever that you are telling, then I need to know where to draw the line. The banks which won't do that, why banks? Even insurance company or whichever BFSI it is, then you are heading towards a disaster. You should know what your partner is capable of. And accordingly, you have to plan the things. You cannot just go and tell, just because they are a small company, and they came up with something like, I will give a classic example of video KYC. We are having a fintech. So I know in the entire process, there are 15 or 20 steps in video KYC. Which particular step can be assigned to them? They do come to us and tell, sir, oh, baki ka bhi do. We don't give. Because I know that it's a growing company, it will take some time to reach a maturity, and after that, I can slowly move on to him. So I think the responsibility lies with the elder brother or the bigger institution.
Sure. Quickly, you want to add something, Bala, you said?
I think it also lies in the DNA. for a very quick answer, right? Startups learn from failures. So their product will never be ready. As they grow through various funding, various seed stages, they will build a product, they will improve on it, right? That's why they start with what is called as MVP. Whereas as a bank, you cannot fail. When you launch something, you cannot fail, right? So you're at two ends of the spectrum. So here they learn from failures, here you cannot fail. So that's why you have to bring both of them together.
Sure.
So I just thought one last statement I wanted to continue on that story of, our farmer. So now that farmer, let's name him Ram Ratan, right? So he learns everything. He becomes, he comes with a bank account now, right? And he's a rich farmer. And suddenly, he starts playing on a smartphone and then gets into embedded finance. And that's where probably, Mr. Goutam Datta's organization will sell him life insurance. He's now a rich farmer. His son is going to come back from Dubai, and therefore he'll look at the remittances from Federal Bank and then say, okay, I can transfer all the money and come back. And then his son comes back and does, he starts trading in the agricultural commodities which his father has built from the entire farmland, right? And that entire farmland is financed by, by SBI, looking at Google Earth, and I'm just visualizing the future. That okay, this farm truly will be green with all the weather forecasting patterns, and therefore we can actually give him a loan. And then immediately Mr. Abhijit Singh also says, I also want to give him a loan because he has a large patch of land from which he can build a palatial farmhouse. Right? That's exactly what I mean by insurance is there. Life insurance and general insurance. And general insurance, whoever wants to give, right?
The story started with life insurance.
This whole idea was found by his son on ChatGPT.
And all of these experiences are built on Adobe.
And then you have lenders lining up only because, you build that entire ecosystem riding on public infrastructure, systems built, right? And that's the future of India. I just wanted to leave it there and the fact that we can enable all of that. Thank you.
Sure. Great points, Bala. In fact, I think you should also write some columns for us now. Great narration for sure. But thank you so much for listening to us very patiently, and thank you so much, each one of you, for sharing your time and the perspective here at this panel discussion. Thank you so much. Faisal, back to you.